Midterms, let's go there. It was in your note this morning. Is that just a risk event, Mike, we need to clear? Or does it have outcomes that have consequences one way or the other?
Yeah, no, I view the CPI as kind of this risk event that needs to just get it out of the way. It's sort of like, who cares? It's backward-looking data anyways, but we got to get through it, and then we're pretty confident that 6 months forward, inflation will be materially lower. That's our forecast, and so it's just that's kind of the risk event that just has to come and pass. The midterms, though, however, could have lasting implications if it's a decisive victory for the Republicans, because as I said before, we think the majority of the inflation spike was a result of excessive fiscal spending, and that, of course, will be curtailed even if the Republicans just win one chamber. That's not to say that the Republicans are fiscally conservative incredibly fiscally conservative, but it does throw a wrench into this idea of a single party, which the market also likes, the idea that no one party having single control. So ultimately, it should be good for bonds. Bond yields lower has been key to our tactical rally call, as you know. And look, I want to make it perfectly clear, John. If we don't get rates to come down, the rally's over. We had it 39.50, but we see enough in the tea leaves and enough in the technicals to suggest we should hang out and see these two events this week play out first.